When it comes to the Abenomics, the key issue is really to resume consumption. And in order to achieve this result, the Japanese government has been keen on first bringing some reforms into the corporate sector, but also trying to give confidence to Japanese consumers that they can really believe that tomorrow will be more attractive than today. One of the first evidence of this development is really the CapEx, capital expenditure. As Japan has been under deflation for a number of decades, let's say 2 decades, we see now that the Japanese companies are investing, and this is very, very good news for Japan. We do also see that Japanese companies are buying, adding, but also buying back their shares, increasing their dividends, and more importantly, looking abroad. We've seen recently more merger and acquisition in Japan, and this is a very good signal for investors willing to invest in this region. Another element, which is quite important too, it's unemployment. And today Japan is really at a record low unemployment rate, 3.3%, meaning that many companies are really finding difficulties to find good talents. And this is probably something that could lead Japan to reconsider its immigration policy, which could be a very positive reform and development for Japan in the future. On that front, and because Japan has been often seen as an island, very insular in its mentality, we see that tourism is increasing at a very fast pace. The latest figures show that year on year, between 2014 and 15% more tourists have come to Japan to visit Japan. It's a big boost for consumption, even if it's not to the extent of Japanese consumers themselves, but it is also very positive for consumption, because all those foreigners coming into Japan are spending big tickets in Japan, not only for luxury goods, but also for health treatment. This situation is really leading to some pressure on wages, and we do see that wage growth will be a key beneficiary for Japan and will be a key booster for the Japanese equities going forward throughout the consumption growth. Last but not least, the GPIF. It's been a very, very important topic during the past 2 years, and today most of the reforms have been enforced. The most important one is really the stewardship code. It means that corporates have to comply to a number of new regulations and new metrics in order to fulfill all the requirements from the pension funds. It means that they have to onboard independent board members. It means as well that they have to increase dividends and share buybacks. And already, as people are always looking for evidence, we see that those share buybacks and dividends are increasing, and 2015 should be a record year for share buybacks and dividends. With all those reforms being in place and with all the evidence that we start to see in Japan, we are very confident that the Japanese equities will continue to have a very positive future. The discount that Japanese equities have been trading at for the past couple of decades is no longer valid on the back of the reforms the Japanese government is enforcing. We do believe that this discount will narrow and that today it's a very good entry point into Japan because of the valuation, which are still very attractive. But because of all the changes in Japan, corporate governance, buybacks, dividends, but also consumption growth, which is resuming, means that for many Japanese companies, earnings growth will continue to be very important. There is no reason for Japanese corporates to stop growing their dividends and their earnings in the future. And that's why, on that basis, we prefer to invest with value managers in Japan. Thank you very much.